JB Cycles with update on November the 27th. So I have cycles chart here with 3 cycles and the composite. And actually I forgot about the 16-week ringing cycle for a while, and actually that one seems to be the dominant cycle. But of course, when I just rediscover that, probably some other cycle is going to take over as the dominant. Well, we'll see. I'm a bit worried about the 10-week cycle, because that one turns up right now. It's going the opposite way as the 16-week cycle, and then this one supports Christmas rally. But I think if we do rally with the FOMC decision and we rally into New Year, this bear market is over. But as I showed in my yesterday's video about the Fed, CPI and unemployment, it's to me unlikely that the market will get any help, that we will see any pivot in the near term from the Fed. And as we are in a bear market, we should stay there until we get this pivot. And we have seen activity decrease in different areas, but maybe mostly in Europe, because when looking in US, durable goods order is not slowing. Industrial production, well, it's kind of flat now, but unemployment barely done anything. But we do see in the PMIs that they are weakening, but we have a lot of high commodity prices. I think resources are scarce, many, and kicking off with a new bull market here and loosening. That increased demand for scarce resources would just make the inflation shoot up, and I think that's not what we want, especially when we have such a low unemployment. Then the Fed or the central banks have a lot of room for tightening, and I think that's the reasonable thing to do in this situation. We should see tightening, and this should be a bear market rally, and then we should see the 16-week cycle be dominant and take us down to a lower low. So let's look at some other stuff. My 4-week cycle, well, neither the old or the new cycle are working at the moment. I think we have this new rhythm here after the cycle changed back in October, and this one says we are just at the 4-week cycle high, and it goes down to around December the 7th. But then, it goes up just ahead of the Fed decision, meaning we should see a pullback very soon now, but we could then see another bounce or rally before the Fed decision. Maybe we could make some kind of a double top here. But at the Fed decision, we should see a negative reaction, because if we rally, bear market's over, in my opinion. At least I have no edge at all for further bear markets. Looking at my momentum indicator, it is starting to roll over, making it some kind of a double top. It has done so earlier, so it looks set up for something to the downside. And looking at some sector indexes, many of these strong ones look set for some kind of a pullback or energy rolling over. Should soon see some kind of a break here, many of these, and we should have a pullback. So we have my 7-year cycle. It's kind of suggesting 5 moves down, but that's the average cycle over 70 years. but we see some bear markets, they may start, bear markets may end earlier, but yeah, it's still favoring downside into March or even perhaps July, August. But we are just at the 200-day moving average and the falling trend line, so anything could happen. And I really would have preferred to see us not staying above the 21-month offset or 90-week offset. I would really like to see us getting below here. That would trigger some nice downside projections there. And looking at my hourly data, this is the Dow Jones Industrial, and we have an interesting pattern. If we look back in March, April, we had, that was actually the low. I don't know, what was that, the February 24, or was that later? I don't remember. Anyway, we have 1, 2, 3, 4, 5 waves up, and actually this fifth wave in the Dow Jones was the highest, but the S&P topped out here and made a lower high at this point. But this move is the exact same move as the summer relief rally, also 1, 2, 3, 4, 5, and it's the exactly same move as we are currently experiencing. Here I haven't adjusted all the waves to the, but you see we have 1, 2, 3, 4, 5. So the length of these are exactly the same, and 5 waves. So I do have a setup for a downswing here. Here we have the 1, 2, 3, 4, 5 waves. But what can we expect? Some kind of pullback and then a rally ahead of the Fed decision? I really don't like to draw any scenarios here yet. But we could see some kind of a double top, and then we should react negatively on the Fed and then start a serious downtrend. So was that it? Let me see. The most similar cycle was from the 70s, 72, 3, 4, 5 period. Well, comparing with today, it's not that similar. Well, kind of similar, just that we didn't flush down with the CPI, we squeezed up with the CPI. Otherwise, very similar. So yeah, this could suggest, well, I don't want to guess on that one, but I think we have it there. My composite of these 3 cycles is suggesting a downtrend into February, but I also could see us rally from here, although that would be totally against my expectations, so to say, and what we should expect from the central banks and what the market should do in reaction to those policies. So, see you in the next one.